So now I'm going to invite the participants for our last panel to the stage. Jerry Cross, Director of Financial Regulation, Policy and Risk, will chair the panel. In addition to Alexandra, he'll be joined by Martina Fitzgerald, CEO, Scale Ireland, Brian McHugh, Chair, Competition and Consumer Protection Commission, Rachel McGovern, Deputy CEO, Brokers Ireland, and Anne Prendergast, Executive Vice President, Head of Europe, Middle East and Africa, State Street Global Advisors. Thank you.
Thanks, Denise, very much, and thanks, Alexandra, for setting the scene so well and for being with us today. We very much appreciate it, and indeed to all our panelists. Thank you very much for being with us. And I think this is a really nice topic to round out what has been a really stimulating set of discussions during the course of it. It's great to see so many people still in the room for the final session. It's always a slight worry, will you be will you still have lots of bodies? So great to have you here. And maybe it's kind of traditional for the chair of the panel to introduce, but I'm actually not going to introduce the session anymore today because I think we've a lot of ground to cover, and I'd like to start off by asking the panelists, really for them, what is a well-functioning financial system? What are those outcomes from their perspective that are most important? Is the Irish financial system delivering on that? And what maybe is the most important gap, if any, that they see? So maybe Martina, if I may start with you, if that's okay. And from your point of view, what is a well-functioning financial system? What are the outcomes that are important, and is it working here?
Well, first of all, I'd like to explain that Scale Ireland is an independent, not-for-profit representative organisation that represents tech startups and scaling companies. So we represent startups of all stages, all sizes, all sectors, all around the country. In relation to fintechs, we represent the very early startups that want to be the next Fire, the next Finergo, the next No Friction, but we also represent the established companies that want to be tomorrow's Stripe or Revolut in terms of ambition and scale. So in terms of pillars and whether it's functioning, I think key pillars would be obviously innovation, competition, regulation, access to funding. Obviously it has to protect the consumer, but it has to be of benefit to the consumer as well. And on that and on our members, do they believe it is a good and well-functioning financial system? Some would say yes, it is. But others, the feedback that we would get is that it is lacking in terms of innovation, competition, and access to funding. And it really depends on who you talk to. But in terms of some of the common themes that come through, for instance, for fintech, it is very hard to enter the regulated market, and it is getting more difficult. That is a strong view. Also, that processes need to be more streamlined to enable competition while also maintaining regulatory standards. There is also a view that the Department of Finance needs to play a stronger role. That would certainly be the view by some fintechs, and that is the case in the UK. And in terms of the banks, some strongly believe that banks are not serving the fintech payment community in a meaningful way, and I mean banks in general, in the services that they provide. And I do believe in being positive. So on a positive note, in the middle of next year, regulated fintechs can potentially become a direct participant of clearing, and they'll have less reliance on the banks. And that will be really positive in terms of reduction of transaction costs. One fintech founder said to me it would reduce his fintech costs or his transaction costs tenfold. So that's positive. So they want to plan ahead to take advantage of that, and they would seek meaningful and proactive interaction and interfacing with the central bank now to take advantage of that.
Thanks, Martina. There's a lot in that, and we'll come back to a lot of it as we deepen the conversation. But thanks for setting that bit of the stage. I mean, Brian, I guess some of those themes would also resonate with you a little bit. But I mean, you were the Consumer and Competition, Consumer Protection and Competition Commission. What, from your point of view, would be your response to the Irish financial system? Does it work well?
So we spent a lot of time thinking and talking about what well-functioning markets look like. And I think it applies as much to the financial system as any other markets. So what we like to see are multiple companies competing on price, on quality for consumers. We like to see churn, changes in market share. We like to see entry into the market and some exit from the market. We also like to see innovation, new products being produced so that those companies are fighting for consumers' custom. So that's open markets. We also, as the Competition and Consumer Protection Commission, want to see fair markets. And that means consumers have all the information they need to make their decisions. That consumers, when something goes wrong, get resolution. And the consumers, in terms of contracts, the contracts are fair. And the consumers aren't disempowered when they engage with often big, powerful companies. Are we there yet? No, we don't think we are. I think there's a lot more to be done to get well-functioning markets in the financial services in Ireland. We have very high levels of concentration. We don't see a huge amount of competition on price, where companies are fighting over consumers on the basis of giving them the best price. We've seen very limited entry. There are glimmers, and I think they are positive, I have to say that, but we will see if they have an impact on market share over the medium term. That is what we want to see in a healthy market. And we also want to see consumers switching and being able to switch in a well-functioning market. And again, I don't think we see enough of that.
Thanks, Brian. Again, there's a lot in that for us to chew on as we go forward. But in the interest of getting as much as we can on the table, Rachel, maybe I'll turn to you. From your perspective, is it functioning well? What are the gaps?
So I think the one strong indicator of a well-functioning system is what a lot of our speakers today alluded to, which is participation in the financial markets. It was really great to see the Department of Finance doing a fund sector review over the last 18 months. I think some of the recommendations that were made in that report that was published fairly recently were very positive around equality in investor products, in relation to taxation, removing levies, and then also looking at the regulatory requirements around the fund sector. I think that we've a long way to go on increasing participation. Unfortunately, a lot of retail consumers still have a lot of their money in bank deposits, as was mentioned earlier. I suppose our members, who are financial brokers, day in, day out, they are meeting clients and they are trying to get them to participate in investments and in pensions. And our own research shows that where a consumer gets advice, that they have 60% more of value in their investments and 55% more in value in their pensions. And we think that's really positive. Our members reach a large demographic of consumers. And I think one of the reasons that they can do this is because of the very positive remuneration model that's in Ireland. It's a very transparent model that allows consumers to go and get advice and either pay by commission or fee, or they're able to choose a broker that offers both or one or the other. So I think that's very, very positive. Yes, so that's
great. Thanks. I mean, we'll come back to that question of participation and how we might drive that forward as we deepen a little bit. But maybe just to complete this, building on Alexandra's initial comments, but turning to Anne. Anne, from your perspective, and I should have said at the beginning, obviously we're talking about the Irish system, but as Rachel says, it's an Irish system which has outcomes internally and also in Europe more broadly. So from your perspective, how do you see how well the Irish financial system operates, and are there gaps?
I think we have to say it works pretty well. We're a global firm. We've got over 2,000 employees in Ireland. It's a key area, it's a key jurisdiction for us, both for the asset management industry that I oversee, but also our fund administrations. And we're not just in Dublin, we're in Kilkenny and Drogheda and Naas as well. So one of the things Ireland has got well, and I speak from an asset management of funds point of view, is that they identified in the early 1990s the emergence of the funds industry, and so made some key strategic decisions at that time with the UCITS regulation that was coming through to adapt that UCITS regulation, particularly as it relates to money market funds and ETFs. And I think when we talk about savings and investment unions, those products are really important to enabling that. So I think it's done a pretty good job, and that's what you have to think about from a financial system. Does it deliver to the Irish economy? Does it allow cross-border business and talent? And does it deliver innovation and competitiveness for the end investor? And Rachel mentioned the fund sector report that was just recently done by the Department of Finance. Really good report, which we of course participated in. And that idea of retail participation is so important. And the big personal regret for me is that we have this magnificent fund domicile that we've built in Ireland, but yet so few Irish investors have direct access to that product, which has investor protection at its core, the UCITS product. And we need to think about that and think about it through financial literacy, cultural changes, distribution models. Rachel's members have a distribution model, but we also need to think about digitization as well, and the taxation part of it, of course, as well. And the other two things in that report, which I think are important, are that we make sure our product is right. So again, from a funds point of view, the two big trends we see globally are the development of exchange-traded products and also increasing access to private assets, which again is important for the Savings and Investment Union. And the other part is that collaboration between industry, regulators, and the Department of Finance to make sure that we remain competitive, because we've done very well. But I sit in other jurisdictions and other conversations where people look at us with envy and are also trying to replicate or indeed outdo what we've created here in Ireland. So we mustn't forget that as an industry.
Thanks, Anne. Okay, look, I think we've got, together with Alexandra's opening remarks, I think we've got a very good set of issues. Maybe one thing that wasn't mentioned a lot, but I'd like to make sure we do cover, because it's so important, given the Irish experience and looking back 15 years, and indeed we see the effects ongoing, and that is a question of resilience, the question of whether the financial system is resilient. And of course, we're all very focused in this context of Draghi, Letta, geopolitical stress. We're all focused on very importantly issues of participation, productivity, and all that. But this question of resilience and its importance, how maybe, Alexandra, if I could maybe ask you just a little bit from your consumer point of view. I mean, how do you see the resilience question? Are we in a good place? Have we got it right? Or do you think that actually that's also something we need to look at further from your perspective?
Yeah, well, resilient financial system, of course, is able to absorb shocks easily, protect investors, and promote financial stability. I would say, from what I heard today, and also from some studies that I had looked at, also the recent, not so recent, assessment from the International Monetary Fund of the Central Bank of Ireland, it seems that there are many elements are in place that allows for resilience. However, from the retail investor point of view, the important things are that they need to know and they can trust the financial system, that it's going to absorb the shocks and also safeguard their investments and their money. And as Governor in the morning said, I would very much agree with that, not to become complacent and really look at it from the point of view of a long-term runner, and also not to try to sacrifice those long-term goals for some short-term gains. And when we talked recently a lot about financial system and activating and mobilizing retail investments, the topic of tax incentives come up. And in general, we as Better Finance think that tax incentives is a very good tool to incentivize people to invest. However, at the same time, we would not like to see tax incentives to be used to channel savings into underperforming products, what we have seen in some of the member states, because in our opinion, it's not the taxpayers' money that should be covering the underperformance of certain products. And in Ireland, I think, as in many other member states, the one gap that you still have is the pension savings gap, and the investing for the future of the pensions. So I think, if I understand correctly, also the 2030 investment fund consultation and agenda is going to somehow tackle the topic of the tax incentives and the tax regimes, which is going to be good, and the review of the consumer code can be also helpful in tackling some issues with the resilience.
Great, thanks, Alexandra. Anne, I mean, maybe I'll ask you a question in a similar place. I think the way the central bank sort of sees this question is, first of all, resilience being the foundation of ongoing success. Secondly, of course, you want to regulate for resilience as efficiently and effectively as possible. And thirdly, you want to understand how resilience dynamic changes as the world changes. And in that context, obviously the fund sector has been the focus of a lot of conversation, a lot of focus, including by the central bank, in that question. What's your perspective on resilience, and maybe in particular around the fund sector? Do you agree that we have material gaps, and how should we be thinking about it?
I'm not going to say otherwise, and we should always be vigilant on resiliency, because again, it comes to the integrity of the system, and we need to think about it from liquidity risk management point of view, investor outcomes, and the broader market as well. As you say, Jerry, the central bank have taken a leading position on macroprudential regulation, particularly as it relates to the funds industry. And we are participating in that and contributing to that here in Ireland, but also internationally in Europe as well. I think it is there's a couple of things I'd note. One is that there's this conversation about the non-banking sector, the MPFI. And I think that that's a good thing, the development of the MPFI, because we now have more participants in the market, so it means we have diversification, we have a move away from the banking sector, and so that will drive different outcomes in market events. And some of those outcomes may be uncorrelated in the way that they weren't in the past. And I think that that's important. It's also a source of other capital sources, which again is important. From a funds industry point of view, I do think that this sole focus on the funds industry as it relates to this topic is too narrow. We do need to think about the funds industry, their part that they play in isolation, but also with the other actors in the system as well. And I would hate for the funds industry to become stigmatized with this focus because we're simply focused on that. And by the way, the fund system is very, very regulated. The product that's been developed over time is envied by many in the world. There's a lot of tools available to us as investment managers in a market event, and central bank is right in saying that we need to make sure that we do that. But also the other thing is that we're the agents for our investors' money. This isn't our money. So we do have a fiduciary responsibility, and ultimately the investment loss resides with the individual, which again is different. So I guess the overall thing is that we've many more actors within the whole ecosystem. And rather than focusing on any one sector in isolation, it's to think about the system as a whole, wherever we can.
Yeah, no, and I think those are wise words in that sense. And one of the things that I think has been striking over the last 3 or 4 years has actually been on the insurance side, where post-crisis we started with sort of the globally big insurance players being designated systemic or not. And then the conversation moved to actually that's not the best way to get at systemic risk in the insurance side. So for banks, we have those sort of global systemic banks, but actually for insurance, it's more important to have a holistic review, and that's what the International Association of Insurance Supervisors now does, is look at things. So I think you're right to say we need to take a whole of the system and also a tailored approach. But I think where we in the central bank would be, it's actually the dynamic. As you say, these are investors, not necessarily institutions per se. These are investors. How do they play out? So yeah, that's a very live topic. Maybe turning, so a lot of you in our earlier conversation talked about participation. Suzanne in the last panel talked a lot about, when we were talking about financial crime and fraud, talked about trust. I think for us here in the central bank, we would see a very kind of close correlation between levels of trust in how the financial system will perform. And Alexandra, you talked about sort of the outcomes for the consumer and trust in those outcomes, the levels of trust and levels of participation, and therefore the sort of the effectiveness of the system. So maybe a question, maybe I'll start, Brian, if I can, with you. You talked about this. Where are we in terms of the system being one that's trusted to work for consumers? Where do you think we are in terms of that? And we talk a lot here about the review of the Consumer Protection Code. Do you see that as playing an important role? And what other ideas would you have for how we take forward that trust question?
Yeah, I think trust is one of the key questions. It's very important that the market is trusted. I think we have seen actions in recent years around the tracker scandal in Ireland, around price walking in insurance, around discretionary commissions in motor finance, positive actions. But I think what consumers have seen is those behaviours were just unfair. And consumers are very clear what they view is fair and unfair. They don't need some technical understanding. They view what happened in many of those cases as just blatantly unfair, where companies, very big companies, acted in a way that was against consumer interests and was unfair to them. And I do think there's a way to go to get that level of trust back, that the system, not just the companies, but the whole system, acts in a way that's fair and what consumers see as black and white, fair or unfair. In terms of the Consumer Protection Code, this principle of acting in the best interests of consumers, I think, is a very important one. I think it's a positive one. It will be difficult, recognise that, but I do think it is important that companies aren't seen to look for forgiveness after behaving in ways that are unfair to consumers, that they have as part of their business model a view of producing the best products because they benefit consumers and they can make a profit while they're doing it. The other aspect of Consumer Protection Code that I think is going to be really important is switching, and I mentioned it earlier. For consumers to really benefit, they need to switch, and it's true in any market. It's very true in financial system. We see in things like mortgages, we see in savings accounts, consumers are leaving thousands of euros on the table. Consumers aren't stupid. The system doesn't work for them. And I think the steps that are identified in the code to improve that system so that consumers can switch, to have the information, the system works smoothly, so that they can take advantage of that money on the table and they can move products. And that involves decisions within the central bank, decisions within other regulators. It also involves departments in the wider system. One example we feel very strongly about, for example, is conveyancing. It is one of the barriers to people switching mortgages. It is a monopoly in Ireland for solicitors. It isn't elsewhere. And it is no coincidence that it is an archaic system in Ireland that puts consumers off and causes them real harm. And that needs to be changed as part of an overall policy of getting the market functioning well so consumers can benefit. And for me, one of the measures of success for the Consumer Protection Code will be, in whatever it is, in 5 years' time, are consumers leaving thousands of euros on the table? Because if they are, our work isn't finished yet.
That's really important. And I mean, you identified one, as you articulated, a very clear barrier, the conveyancing aspect. Leaving that to one side for a moment, if we take other products, insurance, accounts more generally, what do you think are the barriers to switching? Is it just an inertia, and that we sort of have to sort of positively drive at that or build competition? What do you think are the sort of the barriers to switching?
I think you need to understand the whole consumer journey in terms of what information they have, and there's a question there for open banking. Can that solve some of the problem in terms of information? But also, so the central bank produces some very useful research, and I think in terms of the behavioural economics aspect is absolutely key. What forms do consumers face? Are they easy to fill in? What reminders do they get? What information do they get? So we at the CCPC, we have a Money Tools website, which is an important aspect of this. It has nearly 1 million visitors a year, but we're always thinking, what more can we do to get the right information for consumers? Unfortunately, this is not a, with one leap our hero is free. There will be multiple decisions. But again, I'll come back to it. The metric is, are consumers leaving thousands of euros on the table because the system's not working? And until that's fixed, we need to keep trying to find solutions.
Thanks, Brian. Rachel, I mean, your members are in day-to-day contact at the coalface, as it were, of this. I mean, what's your sense, just of this kind of, let's say, core question of trust? Do you think that the levels of trust in the financial system are where they should be? Maybe so. If not, what's missing?
Yeah, I think there is a good level of trust compared to when I started 25 years ago. I think that has definitely increased, and I think, you know, regulation has helped that. I suppose switching, which Brian had mentioned, you know, that is initial barriers to switching. You know, so there are things that we can work on. I think in relation to the Consumer Protection Code, there's probably two aspects from an industry perspective that I think will be helpful and will have a positive impact on consumers as well. I think it can be challenging to have one set of regulations for all financial service participants because they have varying different structures and natures and scale. And I think more specific guidance, I suppose, around concerns, regulatory concerns, and examples of how firms can address those, taking into account their size and nature and structure. And I'm really glad to see the central bank referencing proportionality. I think, you know, it should be outlined in a meaningful way. Through maybe sector specific guidance. And secondly, then I suppose informing effectively is a crucial part of the code. We still get continuous feedback from consumers about the amount of disclosure information. For very simple products such as, say, motor insurance, a consumer is not going to read 20 or 30 pages. So I know in 2022, EIOPA had published a report on the application of IDD, and in there they did cite, you know, that there could be an overload of communication to consumers. So I suppose from the code's perspective, we wouldn't like to see additional disclosure documentation on top of that. Actually, we'd love to see and reduce simplification of the data that consumers get, because, you know, it's worrying that maybe sometimes they're missing the important stuff amongst all of this raft of information that's coming at them.
Yeah, and certainly during the very lengthy and I think for us at least very sort of insight-producing engagement we had around the Code Review, this was one of the, I suppose, the top topics that we heard, which was that sense of disclosure becoming something of an industry, and with regulators to blame as much as anyone else in some respects, and therefore the difficulty for consumers actually to get the meaning out of it. So that is one of the things, and Brian, you referenced it, that I think we really have tried to do is in this context of, you know, securing your customers' interests, this idea that it's not about the quantity, it's about, are you conveying the understanding, right? And a lot of what we do in the, and as you say, Brian, we did some research around mortgage switching and just the power of how the bank informs the consumer and a reminder. And if you get both those things right, sort of that doesn't just read like another thing to go in the waste paper basket, but it looks like something that is trying to help you understand something with repeats, then that really works. And I think that's sort of the wider picture of what we've been trying to do with the Code Review, is to get internalized in the system these things that we learned during tracker, differential pricing, business interruption insurance, the account migration when the two retail banks were lending, where we have seen improved understanding amongst the participants, which is that it's not about saying, I'm doing what I'm legally required to do. It's about internalizing that question of, what is it my customers would reasonably expect me to be doing, and that's what I think makes a difference. But of course, as you say, it's a journey. I mean, Alexandra, from your point of view, taking the European perspective, levels of trust. Are we in a good place or not such a good place, or how do you see it?
Well, some scoreboards of the European Commission have shown we are not in such a good place. And in fact, also dropping the competition from any of the titles of the EU commissioners is already concerning from the investor and consumer point of view. It's great to see that the competition and consumer protection is here today with us, because competition is extremely important for driving the outcomes for consumers. And in fact, as Brian said, consumers are not stupid. It may sometimes seem irrational what they do, investing in very complex, inefficient, underperforming products. But normally when you look a bit into how does it happen, it becomes quite rational. I mean, normally you would expect them to invest in performing simple products. It's difficult for them to invest in them because they are normally not on the shelf. Quite often they go to financial advisors, and since the predominant model in the EU of distribution of retail investment products is the one based on commissions, very rarely, also confirmed by different research and studies, they are offered or are being recommended to invest in simple and efficient products. And in fact, when one lands at the airport here in Dublin, the first thing you see is, you should try to build your financial future in order to keep being able to finance what you want, what matters for you, and it invites you the big advertisement to go to a financial advisor for a chat. And it's great to hear that in Ireland people in fact have choice and can choose an advisor that is either remunerated on the basis of the commission or it's a fee-based advice, because in most of the member states it is not the case. And also, as some studies have shown, the moment that people do realize that if they pay the commission, actually a huge part of their wealth is being transferred to somebody else, the interest in investing drops dramatically. And also, as Better Finance says, investing is not a full-time job, and people should have the access to independent advisors, really advising in their best interest. So this is still a thing that I would really like also to know how Commission is going to tackle it, because it's one of very important problems. And the second one that I already said, it's pensions. And also I think we are not definitely there where we would like to be. In Ireland, for example, it seems that there is an issue with women definitely investing. Only 26% of the female population are investing. So there is definitely issue with trust, but also with access to simple and efficient products.
Thanks, Alexandra. So we've talked about a number of aspects. So I think came through the initial comments. So we talked about resilience, we talked about trust and participation, and I think sort of hand in glove with that, Martina, I'll turn to you, is this question that you raised off the bat, which is, again, I think it's two sides of the same coin: innovation and competition. Because if you've got innovation, you will have competition. Where do you see, or how do you see the innovation and competition journey here in Ireland? Have we made good progress? Are we in a good place in terms of innovation and competition in the financial sector? And is more needed? And if so, what more?
Well, I would say there is more need for innovation and more need for competition, and I think most of our members would be on the same page on that. It would be unanimous. I do think it is very hard for new entrants to enter the regulated market at the moment, and innovation only comes about if you have new entrants with innovative products being able to access the market, and that's why we were strongly supportive of a regulatory sandbox, and that's why we advocated for one at the Commission on Retail Banking and also with Commissioner McGuinness. We now do have a regulatory sandbox. It's up and running. It's going to focus on combating financial crime as a starting point. I do think it's fair to say that most in our sector would like to see a stronger model, and they have come up with very practical, pragmatic ideas of how it could work stronger for them. given the level of compliance that they face. For instance, one would like to see, or some would like to see, a sandbox where you have participating firms being provided with a license to operate on a restricted basis in the market, so they could validate their product and get feedback. And then if they're successful, those restrictions could be removed and they could get a full license. And obviously this relates to regulated fintechs. Others believe that you could also have sandbox participants being able to produce and submit their documentation for authorization applications, and that they in turn in the sandbox could get continuous feedback from the authorization teams specifically, because they feel it's really important who they get the feedback from, and that would enable and really help them overcome a lot of barriers. And as one pointed out, that to get electronic money institution status, if you're successful, at a minimum it's going to take 1.5 years, and at a minimum it's going to take €1 million in costs. And on top of the sandbox, because the sandbox is not just the only answer, that there could also be a role for the regulator to publish perimeter guidance, setting out the requirements for being regulated and non-regulated, so that could reduce the fees on early stage startups who are fintechs. And also an approach document could be published on the obligations, their regulatory obligations, so that they could set up their controls and facilitate them setting up their controls and practices for compliance. And I suppose this is really about a theme that has come through at a European level. It's regulatory clarity, and that if you have regulatory clarity, you are being an enabler. And in the Stripe 2022 EU-wide survey in our sector, this was a major theme. I also do want to stress, when you mention more regulation or more competition and more innovation, you could go on for a long time when you represent fintechs. But one thing that certainly I did want to stress was that comes from our members is safeguarding banks, and that the need for more banks in this area and more competition.
Thanks, Martina. There's a lot in that, and it's kind of interesting, the things you have mentioned there, and it's a rich set of themes. I mean, they're very much the themes that I think here in the central bank we have been wrestling with, as we also have gone along that journey. And I think one of the aspects of the journey has been just that getting that sort of dovetailing between regulation and its mandate and innovation, getting that dovetailing good or well done. And as you say, so the sandbox is now on its first iteration. We're just reviewing the applications, of which there have been many, I am delighted to say, and many good ones, which is also great. But then these other so issues around sort of authorization and transparency and clarity, and how to interface regulation with consumer protection and innovation. Those are things we wrestle with. I think there's a conversation that will run and run. But for example, on authorization, we have now hopefully made more available in terms of transparency and clarity as what people can expect about speed and timings and all of that. So it's a very good set of issues. I mean, I don't know, Anne, from your point of view, as you observe it and you see various aspects of the market, where do you think the Irish system is in terms of innovation, competition? What's your view on that?
Yeah, I think to Martine's point, it's about creating that environment which is risk controlled, but becomes an incubator, rather than developing the perfect product and then going from there, because that's kind of too late. If there's one area for our industry, it is tokenization. The governor called it out earlier, and we do see other jurisdictions having those conversations with us as asset managers much sooner, and having practical use cases. What's interesting is the first place we're probably going to see tokenization are in money market funds, just given they're structured the way they're used. It's the most obvious way to use tokenization. We are the largest domicile in Europe for money market funds. So there is more that we could be doing in that space, and I think we should think about how we might do that.
No, look, I think that sort of resonates with me, and I think we also would say, I mean, kind of the conversation that's happened this morning, which is where will tokenization have its first real sort of fruition? And I think certainly the issue around some of the funds areas is ripe. So that's a conversation that I think is ongoing and is a good one to have there. Rachel, from your perspective, how do you see innovation and competition?
I suppose from a competition perspective, there's been a retraction in the market, especially around access to certain types of insurance post-Brexit. We would have seen a lot of insurance that was available in the market no longer be accessible. So we're working with the Department of Finance on that particular issue. Obviously, the banks exiting decreased competition in that area. Thankfully, we have seen a few mortgage lenders kind of enter the market over the last 2 years, and a lot of them have a distribution model through brokers, which is great from an accessibility perspective, and that they can get in there quick and they can reach kind of geographical locations all around Ireland. And obviously, going back to the commission-based system, it allows those consumers have accessibility to those products without having to pay upfront fees, so which is really positive. But yeah, I think we have a lot to do still in the area, so that's...
Thanks, Rachel.
Thanks.
And maybe Brian, on this question of innovation, competition, anything more that we should be...
Yeah, well, I mean, from our point of view, competition drives innovation.
Yep.
The Irish markets are quite highly concentrated still, and we see in other markets, grocery markets, for one example, we've seen the discounters come into Ireland and have a huge impact. And one of their innovations are actually to offer consumers less. So you didn't have 15 mayonnaises, you had one mayonnaise, but it was cheaper, and that's what consumers wanted. And ultimately, consumers decide what innovation wins. I mean, there's a reason in Ireland people don't say Bank of Ireland me or AIB me, they say Revolut me. And that's because that was what won over consumers. It was that level of innovation. They're the ultimate decision makers. And when I mentioned the discounters, the Aldis and the Lidl, they came from a European market. Single market is a huge benefit for consumers, and it's been mentioned by Alexandra. The Capital Markets Union has the potential for huge benefits for all European consumers and Irish consumers. To have lots of companies competing for Irish consumers' wallet and to bring the products and services that they want. And I do think from policymakers' point of view, that's something that we will continuously be saying, that there's huge benefits there in the Capital Markets Union.
I agree with that. Thank you. So we have a couple of minutes. I have one online question, but let me see if there are any questions in the audience. We have mics roving. I see Suzanne here at the front. And then behind Suzanne, Carol. Okay, so that will, I think.
Thank you. Just to pick up on Brian's point, there was a piece on the radio during the week about, the sort of language that teenagers use, and what people were saying was TURP, which is top up Revolut, please. So that's the message that was being sent to parents. So you're absolutely right. It's a verb as well as a noun. But I mean, to go back to Deputy Donohue's point this morning, which obviously as a Minister for Finance or Depender, unlocking that 154 billion that's just sitting on account, I mean, you'd be rubbing your hands with glee with that. But to ask, and I think now again I'm paraphrasing, you mentioned, to get people interested in investing, you were looking at sort of literacy or knowledge, then there was also issues of access, and then there was also taxation. Now, I may have forgotten one, I can't write that fast. Are they all given the same weighting? And if you had one lever in order to actually get people who don't see investment for them, because again, trust I think is a big thing as well. And when we talk about brokers and we talk about financial advice, do they have their best interest at heart, or do they have my best interest at heart? But if there is one thing out of those, as you said, knowledge, access, literacy, or taxation, what would your lever be? Thank you.
I'll just go to Carol and then we'll go around. Yeah.
Thank you, Jerry. A brief question. If the industry representatives could respond to the question how to overcome fragmentation in the European market. So what ideas they have to drive scale for much bigger fund products with much lower costs in the European market.
Thanks, Carol. So 2 easy questions, and an even easier one online, which is not not easy. How might mid-sized SME capital funding be best developed, and how might people be persuaded to invest? So look, we have a big set of questions there. I'm going to go very quickly across the line and just maybe almost use this as last word. So we have the question from Suzanne: what's the most important thing? Literacy, knowledge, access, or taxation? Got the question from Carol: how to avoid fragmentation, or how to overcome fragmentation? And this question about capital funding. So pick a topic and give one line answer to one of those. Anne, I'll start with you.
Well, because it was directed towards me, I'll go to the retail participation. To be honest, it's not one lever, but I will say, so if we look at good examples, Germany have done this really well, where people are saving 20 euros a week. The three things that helps them are they do it digitally, it's a digitized platform. The product is an ETF wrapper, which is very efficient, cost efficient, simple, and they have tax benefits. So, and they have driven 70 billion in savings in just 3 years. So, yeah.
Okay. Thanks, Rachel. Any key final thought?
I think financial literacy is so important. I think there's been a bigger focus on it over the last number of years, but I think we need to start looking at education from when kids are in primary school. We need to start educating them about financial products and services, and just the basic budgeting and everything from when they are in primary school up. We do our own TY programme at secondary school level, and there's lots of engagement, and it's really positive. But I think that's a huge thing that our members tell us, when dealing with consumers, that it's really important that they have to start from scratch in educating sometimes consumers before they get into, what they should be doing for the long term. So, I think that's really important.
Thanks, Rachel. I know, Brian, for you, financial literacy is also extremely important.
Yeah, that would be my direct answer to the question. We need a national financial literacy strategy. We're going to get one, thankfully. And I think how the regulators work together across the central bank, the CCPC, Revenue, Department of Finance, Department of Education is going to be a huge part of that. We know financial literacy has a positive impact on financial well-being. So I think in terms of giving consumers confidence, it won't solve all the problems, but giving them confidence to interact with products, I think it has the potential to have a big long-term benefit.
Thanks, Brian. Martina?
It's hard to disagree with financial literacy, to be honest, and this was a key theme at the Commission on Retail Banking many years ago, and it still remains a key issue. So I'm going to echo the sentiments. I do want to say for our own members, it would be remiss of me not to leave the stage without saying one of the two things that we'd like to see is further engagement with on a different issue with a wider range of regulated fintechs and streamlining processes, obviously while upholding regulatory obligations.
Thanks, Martina. And that's Andrew.
I would say two things. So first would be competition. Don't foreclose, and it would be plea for regulators, don't foreclose competition, but allow a level playing field, because products that have the potential of being really innovative and provide cost-efficient options for consumers like PEP are not right now successful because of the lack of the level playing field in certain member states. And the second would be access. And the perfect example was really the investment and savings account in Sweden. And really all stakeholders from the industry, from retail investors, underline two main characteristics of this product. It's simple and it's very easy to use and makes almost the tax declaration for you. So making it easy and simple is going to make investors maybe invest finally.
Great. A great note to finish on.
Well, I will only say from a funds point of view, because the point of the funds, these are EU authorised funds, and so they operate cross-border. The only obstacle to that is that regulators across the union don't always operate with a single playbook. So I think there is an opportunity the purpose of this is cross-border, and we could drive much more scale, but it is a challenge sometimes.
Great, thanks. And last word, great. So Alexandra, Martina, Brian, Rachel, Anne, thank you very much. Really insightful discussion. Thank you. A hand of applause. Thank you very much.